Well, I'm joined by newly appointed CIA President Rajiv Memani. Welcome to NDTV Profits, sir. Sir, the hottest topic of the season is India-US deal. And yesterday, Minister saying that deal are not time-bound. There is no deadline to it. Then we have West Asia disruption going on. How you see this entire development, how India Inc. is looking at these ongoing developments, and in terms of how they are planning their capex and expansion plan, given the uncertainties at this point of time?
Yeah. So I would say I will answer this in two parts. First is, I think in the last 6 months, 9 months, we have seen an entire recalibration of global trade. The economic order in the way global trade was conducted has completely changed and is in the process of changing. A lot of countries there is a flurry of signing FTAs with countries that you want to build an long-term economic relationship with and where interests are complementary. And at the same time, there are geopolitical disruptions that you talked about that are happening. So from a business standpoint, there is a lot of uncertainty, and business and uncertainty are generally not good friends. So when you have that much of uncertainty, it does impact your ability to plan long-term investments. So a general sense in a lot of these things is let's do 60-70%. But let's not go whole hog. Let's wait for 3 to 6 months. 3 से 6 महीने में क्या हो जाएगा? And then let's see what's going to happen. So I would say bullishness on India continues. The Indian resilience story is very clear. I think there is a tremendous sense of optimism, especially in the way macroeconomic factors have panned out, the way inflation, interest rates, some of the proactive moves made by the Reserve Bank of India. The corporate balance sheets are very strong, debt equity ratios are low. People are trying to see how they can leverage capital markets more actively, raising capital, demerging, disinvesting, acquisition. So there's a lot of that activity happening. So overall, and they know that eventually growth will be rewarded. And for achieving growth, there is capex and there is healthy competitive tension on that. So when a lot of people say that private sector capex is not happening, in my view, last few years will bear this out. Private sector capex is happening. The posture is right. The only challenge is that because of these global uncertainties in the 3 to 6 months, last 3 to 6 months, and hopefully we are towards the tail end of it. You know, as things settle down, people will get a clearer picture to when they were to model tariffs, rates and everything, they'll have a better perspective to say what it will be and where will it be. So I think that's the, if I look at it, that's the narrative that's playing out. Coming to the the first part of your question, but on the US FTA, I think India-US FTA is a strategically important FTA. I think what the Commerce Minister said doesn't come as a surprise to me at all. I must compliment him, his ministry, other ministries, other wings of government. I think they have spent inordinate amount of time to understand the issues, challenges, opportunities of each and every sector. Whosoever has wanted to engage with them, I think they've engaged with them. Whether it's a large company, whether it's an MSME, whether it's small sectors like even hand tools or gems and jewelry, or bigger sectors, you know, auto, EV, chemicals. So I think they have had conversations, and through CII, I think a lot of these conversations have been facilitated, and we have seen the level and details that they have gone into. And it's very clear that they wanted to fully understand what are the opportunities, what are the challenges, and how Indian companies will see to it. And then on that basis, try and see what's the best trade deal that can happen. Now, they will not be all winners in this. They will not be all losers in this. But I think as long as in aggregate, India is benefiting from this transaction or from this trade deal, I think industry would be very happy if it happens, because industry doesn't want to be imposed with a tariff of 26%. And especially in, you know, because not so much of the tariff, but when you compare with relative competition with other countries that are competing to invest in the US, then I think it becomes a bit of a challenge. But industry would only be comfortable with it if it's in the broader interest of India. And I think the same, and I think what the Commerce Minister has said has been very reflective of the tone and tenor of the government, and I think the industry is fully with it.
But do you think that India Inc. is prepared for both scenario, both outcomes? First, of course, no deal, which could trigger 26% of retaliatory tariff. The second, of course, if an initial or first tranche, you can say, will happen, that may or may not advantageous to, industry. You think the preparation is there?
Yeah, I think, listen, I think people do their own scenario planning. And some of the things are more shorter term things, tactical things that companies do. And I think I'm sure quite a few of them are preparing for that. And some are more longer term structural changes that happen. And that I think people will want to find out what actually plays out. As far as the short term fixes are concerned, definitely people are involved. I think a lot of people have also understood what the opportunities are. They've also understood what the competitive landscape is. So to that extent, definitely there is work that's going on. And there's also a reverse side of it where, US companies would be looking at trading more with India, investing more in India. And there are some sectors where the competitiveness of Indian companies may not be as much because of some natural advantages as US. So to that extent also, those companies also, if the trade deal were to be signed, will have to be prepared for how they deal with a situation where tariffs suddenly come down by 15-20%.
But sir, some of the contentious point which has emerged so far in the ongoing talks is on the points like agri, on the points like dairy products, GM crops. So do you think that the government stand, which is quite firm on these aspects, you think it's a right stand and they should continue with that and of course in the national interest?
Yes. I mean, I think, agri sectors like dairy and some of the others that you mentioned are very sensitive. Large parts of Indian population are dependent on this. So to have a broad sweeping change is something that's not desirable and probably not implementable as well. So, and definitely government will not do anything which is not in the broader interest of people. Now, there could be some areas where through quota restrictions or some controls, you could open up some of the areas where the competition may not be that direct or there may not be that much of overlaps. But you ensure that the checks and balances are there and there are QCRs that are there because of which the total import doesn't exceed a certain quantity, doesn't exceed a certain value. Now that they may do to ensure that both the sides benefit.
Correct.
And there is no one who ends up losing in the process.
But at the same time, there are discussion around that the WTA stand, which India has kind of proposed. Out of curiosity, I'm asking, when the deal is already ongoing, there is no conclusion so far. Of course, the stalemate continues. But then, why you think India has, saying WTA that we are also preparing for retaliatory tariff action?
And this is part of strategic negotiations. It's very difficult to comment on that, but I think whatever I would say, I mean, as I've told you, whatever interactions I have seen, I think they're thought through, very calibrated, and various senior members and officials of government are involved in this. So
But inferences could be drawn that there could be some changes in the earlier thought process as far as deal is concerned. Maybe it's not going the way it should be. So that's the inferences we can draw.
I'm not to the
Moving on.
business of speculating on this. When it happens, I think most important thing is when it happens, I think it should be something which I'm sure it will be beneficial to India, beneficial to both the countries, and in the interest of the overall economic growth in India.
So moving on the China story, we have seen a lot of tightening on the stand of China in terms of first putting export restrictions on rare earth and specialized fertilizer. Now we are seeing some recalling happening as far as Foxconn is concerned, which may have a very large impact on the manufacturing sector. How are you seeing these development, and how this will impact the domestic industries?
I would say that there have also been moves where some positive moves on the India-China side also. There was some talk of the daily flight resumption, some visits by leaders of both countries. So I think there are moves that have happened on both sides. And why I'm saying this, Srini, is that India-China is a very complex relationship, and it has multiple layers to the relationship. Why something happens here, the reason may be somewhere else. The reason may be that there's some other negotiation happening somewhere. Reason maybe there's some other event happening. Something else happened somewhere. So or someone else. So it's a bit like playing carom, where you hit and where it goes is a different play game. So as CII, our only feedback on this is we really follow what the government is saying, what the government is doing. They have a much better picture of what the multiple moving parts are, and as they advise and as they look at it, I think as CII we follow that. So yes, you're right that rare earth issue is a real issue which will impact some industries, particularly auto and EV. I'm not that much aware on the Foxconn issue. What's the gravity of that, and can that be done? Can it be replaced and everything else? I'm sure that should be probably resolvable. And again, as I said, that action may be because of some other action somewhere else. The rare earth kind of issues or other areas where supply chain resilience is something.
And also where we are very dependent
vulnerable on China, or could be any other country.
Any other country.
Yeah, I think we have to be very clear that in this world, in the current world order, to have supply chain vulnerabilities is not exposes you to certain risk. And a lot of these issues are not short-term fixes. One needs to work very hard in a very structured way to eventually accomplish that. So I think government and industry need to work together in these areas to try and see how we ensure that future supply chain shocks are limited to the extent that they can be managed, and the investment in terms of capital, resources, policy changes, incentives, technology partnerships, PLI, other things, whatever needs to be done should be done at the earliest.
Well, we are, I'm sure government is focusing on the external headwinds, but in-house also some reforms seems to be, taking some shape here. So in terms of GST, everyone is now talking about the rate rationalization. In fact, Minister also said, Finance Minister, that this is the time to go for rate rationalization, and that could be perhaps one of the agenda in the upcoming GST Council meeting, as and when it happens. So one of the important aspect is to, eliminate the 12% GST rate, to move towards 3-tier structure from the current 4-tier structure. What's your take on that? And you think this is the right time to rationalize the rates to kind of, push consumption, which is showing some sort of drag?
Yeah. So I would, say, at least my view is that GST has probably been one of the most successful reforms that the government has done. And also probably one of the most complex, because, you have states, center, everyone involved. The legislation has been there for 8 years. There has been a lot of changes that have happened. Technology has played a very critical role in the success of GST. And I think it's really helped in the formalization of the Indian economy. But as the GST matures, as we have more and more technology, as we learn more and more with the experiences, I think it's the right time for next version or GST 2.0. From CIS standpoint, we've recommended 4 sort of broad broad items under which the government should be looking at reforms. One is, of course, as you said, rate rationalization. I think that's important broadly in the structures that you talked about. Also, movement of products from one category to the other. May not necessarily, some products in the luxury segment may not necessarily be luxury and would be there. And at least the CII's view is that in the medium term to long term, economic activity will pick up. So that the revenue neutral rate will not vary that much. And secondly, for strengthening of the Indian economy, the bottom 30% has to be really strengthened. And for that, at least products and services that are going into that, the rate should be as minimal as possible. So 5% or whatever that rate is, so that the consumption grows, consumption basket grows, as you rightly said. There is some fatigue in some parts from a consumption standpoint. So at least this gives that, like the government did on the income tax for middle class and everything. This will give them a good boost. The second area, of course, where apart from rate rationalization, which we think is important, is GST was formed to say that the credit is smooth. You get credit for everything that you do, and it's really tax on value addition. And the least, and as few breaks you can have, is better. So there are two areas where there are some parts of the taxes that were not subsumed in that. I think we have to see if some of them can be subsumed, not all of them, but some of them, particularly real estate. And the second is, the ITC, which is the input tax credit. I think that's really, in some industries, if you're doing capex and others, it's really ballooning up. And, it creates a lot of cash flow constraints, especially if you're doing large capex. So, and in some, because of inverted duty structures, others, ITC number is high. So I think those are some of the things that we have highlighted. Third is, very importantly, the entire audit process has become very cumbersome, especially if you're a company that's working and operating in 7 or 8 different states. Same, assessments being done, same positions being challenged, dual views taken, no standardized SOP for doing audits. Information that's available digitally is not procured digitally, but you have to send large physical copies. So things like that, which we've got from our members, and we have requested, and I think there's been very engaging conversation that's happened with Ministry of Finance. And likewise on the fourth was, some proceduralities and areas of proceduralities that we can look at. I would say that a lot of this also, as we look at it, has to happen at states. So as CII, we are trying a lot through our state regional councils to also have ongoing discussions with the state finance ministers, sensitizing them of some of these issues, so that hopefully when the meetings happen, there is, because the states have an equally important role to play in making some of these changes happen. So I think, so I agree. I mean, I completely agree with you that on rates and others, it'll be a good time to simplify and also look at things which can create greater demand and therefore greater economic activity in the country. And hopefully that economic activity will more than make up for the loss in revenue because of lower rates.
And with GST being a very important, high frequency indicator for the entire economy. So on that front, I wanted to ask that we are doing well in terms of, revenues. So far, things are fine as far as high frequency indicators are concerned. Consumption is also picking up, not in a great pace. But going forward, if this situation continues, I'm talking about the external factors, external headwinds, do you see that it will impact the economic growth, the band which the government has given between 6.3 to 6.8%? Do we see ending up in the lower band?
I mean, I feel very confident. I mean, the high frequency indicators that CII has been analyzing, 34 of the high frequency indicators across demand, production, monetary supply, fiscal, and also global, and also sort of correlating that with global uncertainty and global uncertainty indexes. We feel pretty confident that the growth should be in the 6.4 to 6.7% range. Also, as I said earlier, I think the balance sheet of the country is very strong, economic resilience is very strong. And I think if we reform at a good pace, I see no reason why incremental opportunities will not come. So I feel I feel reasonably confident that we should be able to achieve the numbers that have been stated.
Okay. I mean, not clearly whether it's on the lower side or the upper side of the band.
Yeah,
because we
that's
have
very
a
hard to
wide
put-
range.
Wide range. No,
given.
but yeah, but at least the way we looked at it, we had suggested 6.4 to 6.7%.
Okay.
But in a country like India with global uncertainty, I think to get down to the last decimal point is difficult.
It's difficult.
Yeah.
So, quickly on the point, sir, that India is working to build its own AI ecosystem in line with DeepSeek. Then we have, talks are ongoing on having its own consultancy giant as well, like in the line of Big Four. What's your view? What's your assessment on that?
Yeah. So I would say that the work that India has done on AI is truly remarkable. I think setting up the framework for India doing their own LLMs, government supporting them, getting some very good leaders to be involved in that, building the AI infrastructure, providing that at subsidized rates to some of these companies and organizations has been very good. I think there is a lot of work happening on skilling. I think that's something that we need to accelerate. We are also seeing early adoption of AI to make India more competitive in the usage of AI. And we are seeing that in technology industry, in financial services, and other areas. And I think the GCC part of the world, where India can be the use case capital of the world, I think that is also something that is very achievable. And we are seeing that GCCs are playing a very active role, including when I look at the EY, other professional services firms, consulting firms, they're also using the GCCs, leveraging them to be the pillar or the platform where a lot of AI usage that's happening globally is being done.
So my last question on the point, which is slightly different from the external headwinds or the in-house reforms which we are looking at, on managing these Gen Z's culture, the young talent to manage that is a growing challenge for corporates, for industries, etc. What's your advice to India Inc. at this scenario to manage these young talent, especially when there are a lot of talks around work-life balance?
Yeah. See, as CIS president, and this interview is in my capacity as CII president, that's something that I generally don't want to comment on. I think there is a, by and large, I would say, getting talent and getting high quality right talent is a source of massive competitive advantage. And I would say most companies spend a lot of time, good companies spend a lot of time in trying to ensure that they're able to hire, retain, train, engage, motivate their talent. Every industry is different, challenges are different. I'm sure in journalism, you're not the right model for work-life balance is my guess. So every industry, every universe, everything has its own challenge. And in whatever engagement I have had, I have found companies now more and more conscious and viewing HR as more and more of their competitive advantage.
Thank you, Mr. Memani, for taking out time for us. It's always been a pleasure to talk to you, and your insights. It's always valuable to us.
Thank you very much. Thank you so much. Thank you. Pleasure.